I know how to say Alan Gelder, though. Gelder, hello, sir, the VP of Refining, Chemicals and Oil Markets at Wood Mackenzie. Good morning to you, sir. In terms of the impact of this storm season as well, just tell us what you think, because is there a difference between actual product getting to market and concerns about crude coming onshore?
What we've seen is two things. Your feeding was accurate. This is the biggest shut-in of Gulf of Mexico production ever, so greater than Katrina. About 1.6 million barrels a day of offshore production has been shut down. At the moment, it looks like it's broadly balanced with what's happening with the refining industry in the Lake Charles, Texas, Louisiana border area, with about 2 million barrels a day of refining capacity also being shut down on the basis that it's in the path of the hurricane. So at the moment, those are broadly balanced. It's had a slight increase in crude price. Gasoline prices surged a little bit. But the challenge we've got, normally such a loss of capacity would be far more significant, but we're in COVID-19, our new normal times, and US demand is about 2 million barrels a day lower than this time last year. So that's why the market hasn't really seen much of a reaction to what's a fairly significant capacity loss at the moment.
Yeah, so look, Alan, you're all over this the whole time, but there will be some amongst our viewers who would think last time we looked at US refining capacity and US products was when they saw WTI going negative as well, and all those concerns over filling up with Cushing. Can you update us on just kind of where we are in terms of inventories stateside and globally compared with where the historic levels are and where the likes of OPEC would be comfortable?
Oh, inventories are up. Consequences of the demand collapse, followed by the cut in OPEC production and loss in production elsewhere, means global inventories are much, much higher. In the US, we're looking at 10–15% higher for crude, gasoline, diesel is even higher. So that's why there's little impact on the product loss. In terms of the day-to-day monitoring that we do via our Genscape subsidiary, we're hoping to see assets come online in the next few days. We think the impact of this, if it is, because it seems to be a relatively fast-moving storm, but it's something that we're keeping a track on, is arguably US production for August will only be 300,000 barrels a day below what we were expecting. So it'll mean the global market will tighten modestly, but we're still looking at a few months yet before the oil market, those surplus stocks will rebalance and start to come back down.